Spain's shaky banks, the country's indebted regional governments, and Madrid's plans for helping them have pushed up its borrowing costs to unsustainable levels. Spain reportedly plans to issue new government bonds to raise the money it needs, increasing its debts, which are already causing concern to the financial markets and European officials. The amount of interest Spain's having to offer to get investors to buy its bonds, maturing in 10 years' time, is near 6.5%, perilously close to the levels that led to bailouts in Greece, Portugal and Ireland. This investment banker says borrowing costs have rocketed due to fears about Spain's financial system. But the government is forcing financial institutions to do what they should have done 4 years ago. He added, in 2008, the US and British governments fixed the financial systems there by injecting public money into banks. Now, finally, Spain is doing the same. Banks are being nationalised, which is positive. But we have a shock from the impact we should have had years ago. Bankia is the most troubled, with last year the second biggest banking loss in Spanish history, despite paying its top bosses €22 million. But how much of a mess the others are in won't be known until audits are completed next month. Spain insists it doesn't need external funds to bail out its banks, despite the dire state of the economy. Prime Minister Rajoy said there will not be any European rescue for the Spanish banking system. Our problem is the accumulated monumental debt we Spaniards have at this time, and it's that debt that we have to refinance, which is difficult at this time. Brussels will have to approve whatever Madrid does to help the banks and the regions. The European Commission says it has not yet received details of what the Spanish government intends to do. Spain's been hoping the European Central Bank might help by restarting its dormant bond buying programme, or with more long-term loans to banks. But ECB policymaker Edvard Novotny said that has not been discussed, and it's up to national governments to rescue their banks.